Good evening, everyone. Uh, I'm Michael Beaton. Thanks for joining me at Series Traders weekly week in review or week in preview. Actually, sorry about that. Let's start off by looking at the markets, and specifically, this is going to be probably the most complex macro trading environment that we've ever seen, that I've certainly seen in my lifetime. If you think about it, we've got the Iran war, Straits of Hormuz closed. We beat with NFP on Friday, but there was no real market session as most of the markets were closed. Futures were open for a tiny amount of time to take that in, but we don't really know how we're going to open there yet. So we'll see. I've got three instruments that I do want to take a look at: NASDAQ, gold, and crude oil. We'll get into those maps shortly. But first, let's kind of map out what the week potentially holds. And I do think that the macro headlines are going to be very critical here. On the macro headlines, we've got really a substantial amount of war headlines continue. A couple of things. I do think that, for every overture of peace, there has been, frankly, a move up in stocks and a consequential move down in oil, only to be reverted. So I'm going to be, frankly, very skeptical of anything going out from both sides as to whether or not this is actually um, a turning into less of a hot war and there is peace on the horizon. I'm skeptical. We'll wait and see with regards to what that potentially looks like. In that, knowing that, I do think that it is frankly useful to be a bit of a range trader. I do think that on the especially in stocks, there has been a little bit of a level that I think we're kind of getting close to a point where we're going to see a bit of a rebound. We've sold off pretty substantially over the last 6 weeks, and I think that it's getting a little overdone on the downside. We'll see. With regards to oil, oil will go down, but in the short term, oil has been pretty well bid. I would actually take dips as opportunities to potentially buy oil, and we'll go over those charts here shortly. But before we do, I do want to get into whether or not there's any economic news of note, and primarily looking at U.S. economic data. On the U.S. economic data side, this week really has a couple of critical things, and I'm going to actually highlight those. I think that it's pretty the data calendar is pretty calm all the way up until Thursday, and then on Thursday we actually get GDP, and so that is pretty important. We're going to have jobless claims. We'll also have PCE, price and inflation index as well. But those are pretty critical numbers, and that all comes out around 8:30 on Thursday. On Friday, we're going to have CPI, which is a widely followed measure of inflation. We need to understand, and I think that we already understand that these numbers are going to be high, but they'll probably get even higher here going forward, given where oil's at. And that's kind of the those are the two critical days that you should be looking for data to potentially influence your trade. But overall, I think your trade's going to be influenced by headlines, unfortunately, which makes it a little difficult. Let's get into some charts, and I want to first start off by looking at crude oil because I think that that's the primary driver. It is what is stirring all of the market activity. And if you look at crude oil, really one of the critical elements on crude oil is that we're in a bull market, and we have been, but we actually haven't even seen much of a decline here in crude oil on a daily chart. As a matter of fact, we've bounced off of the 20-day moving average over the last couple of weeks. Last week, we spent pretty much all of last week above that critical $100 level that I had been talking about in last week's preview session. We did dip, and when we did dip, that was actually a spot to buy. they bought aggressively on Friday on a secondary retest of that dip, and then took it from $97 to 113, 114, and that's where we are today. Um, so when it gets down to it, yeah, crude oil has potential to frankly go above 120, 125. Where would I be looking to buy? Well, we'll get into that here shortly. But I do think that we're in a bit of a bull until things get much calmer uh, with regards to Iran and the Straits of Hormuz. So, specifically looking at crude oil here over the course of the next day, and specifically, we've actually started out today pretty strong, but we've actually come right back to where we opened. We opened at 112.47. We got as high as 115.52, and notice that literally in the last 40 minutes or so, we've retraced right back to our open. A couple of critical points. We're getting to the H3 level of CAM, or we actually had probably tested that a little bit earlier today. 116.59 is a critical level. That was going to be and still is the intraday retracement level for for anything under a 4-hour trade. And you're also seeing that we've got a high end H4, which interestingly enough we blew through on Friday, and that's what partly caused the $7-8 rise after we hit the H4 level. I'll go over that trade here in a little bit because I thought it was kind of interesting. It wasn't Friday, it was Thursday. But what you're seeing here is that you're seeing some resistance at the 116.59 level. They didn't get quite there, but it was close. Where do I want to be a buyer of crude oil? Honestly, I want to be a buyer of crude oil below this New York morning low from Thursday, 106.72. And that level is not just potential liquidity and a sweep level. It is also our L3 level. That's the area that Camaria Pivots says ordinarily 75 to 80% of the time, if we do, we will see some sort of a retracement and we'll see a move back. So I kind of like range trading here and looking at oil to potentially trade down to the 107.53. Now, a couple of critical things. I am not going to necessarily short into that 107.53 level, partly because I'm really inclined to be a buyer of oil and not a seller of it. However, that is a potential trade if you can get it. The issue is the way I trade, and I'll kind of give you some inside baseball here a little bit. I actually have a checklist, and this checklist, actually all 9 things have to be completed in order for me to execute a trade. And certainly, one of the key elements is structure. We have structure. Bull trend, high time frame bull trend is up, and that structure, actually, I look at trades on both the 30-minute and the 15-minute basis, and I've got to actually have all of these checklists green in order for me to execute a trade. On the execution side, sell must show trade now, and it does not. So I can pull that off. On the probability side, the trade must be a 60% or higher. Right now we're at 77%, so longs are in pretty good shape, but it's not an A+ trade yet. In terms of the grade's an A because it's long. Now my authority is a level 5. That's good. However, my RMI, we've had such a big run up. We're still overbought, and so if we're long, we can't be overbought. We've got to be either triangle up or oversold for a long position. So, this is not a trade for me. I don't anticipate doing much trading tonight, maybe not until London, but I want to see kind of how this sets up. A couple of other things. On my indicator, it actually shows a reward to risk ratio and where you're at relative to the cam points, and we're red, so can't really trade. Lots of daily range remaining though, so there is plenty of opportunity in these markets to move. Literally only 7 points that potentially, if it trades down, that would be a fantastic thing. We're at 113.51. If we drop 7 points, we'd take us right to this level, this 106.72 level, and that would be a pretty interesting trade because that technically would be the bottom of its ATR. So on an average true range basis, you're probably at an extended point down there, and it's one of the reasons why I really like that long. So if you're up and you're looking at oil, that long is going to be pretty interesting if we can trade down to it. So that's an example of how I use my indicator and this checklist to actually help screen out trades. And I want to show you what that looks like on the 15-minute basis. 15 minutes, a little bit tighter time frame, so you can see that we actually have the same bull bias. We have a lot of the same indicators that are firing, but we still have, frankly, it's a difficult market to trade, partly because we're not at a cam level, and even if we were at H3, we would end up taking shorts, and I'm just not comfortable taking the shorts there without a lot more confirmation, a lot more resistance, and frankly, that's going counter trend. So much better to be a buyer of oil at the 107.53 level. So that's where we're going to be looking, and that's ideally going to happen from a rough time frame perspective. Try London session or early New York. We'll find out. That's oil, and so once you understand oil, it's kind of interesting because U.S. stocks and gold tends to trade opposite and has traded opposite of oil over the last 4 to 5 weeks. Literally, there's a pretty substantial inverse correlation with oil right now. I think we're hitting 70 to 80% on a number of indices. So let's take a look, and we're going to go to the NASDAQ just to kind of show you where things are at. And we're going to look at it on the daily, because on the daily you can see we are in a downtrend, and the NASDAQ, maybe even more so than anything else, shows this pretty well. We had some these highs. We were in a balance range, frankly, for a long time, and there's still some folks clinging to the idea that we're going to get back to that balance range. I'm not a big believer in that just yet, partly because I think that we've probably hit some sort of a resistance level here, and it would take a pretty substantial move for us to come back. But maybe 24,600. That would be I think that would be an excellent place to sell if you could do it. But we didn't get there, and we're already starting off the week on a slightly down level. We'll see if we can close this little gap that we have here, and we'll see if it can rally. But really, the trend is down. I wouldn't be a buyer of stocks on the daily chart. Let's look on the 30-minute chart and see what we can see. A number of things on the 30-minute chart. We are in a bit of a consolidation pattern, so we definitely have a little bit of a flag up here. There is this chance that this flag can come back down, and I think that this area of 24,880 could be support. And then we'll get a chance to see whether or not we can carry on through. All that being said, we did have stock trading on Friday, and what you'll see is that there was a sweep of a critical level here on the 30-minute chart, and that sweep literally starts at 24,200, and we've done it. We've tested it once, twice, 3 times. Since then, since Friday, we've actually traded lower, and we'll see if we can get this level back. I don't believe we can. Odds are we're going to see probably a little bit of a rally, but maybe a rally to the midpoint of the wedge, and then I would expect to see some sort of a sell at that point. I'm not exactly thrilled to be selling it here. As a matter of fact, there is no edge for me to sell it here. I've got to see it trade higher and trade into some sort of resistance. I'm not a big believer in these cam pivots, partly because unlike gold, which was closed on Friday, there was this little skeletal open session for stock index futures on Friday, and this cam level isn't accurate in my mind. So I'm not willing to necessarily lay out sells at H3, although at H4 and getting back into this resistance level that we did trade on Friday, that would be kind of interesting. It would be interesting to see what happens up there, whether or not we could pierce it. And frankly, I'd be much more inclined to take a sell of shorts in a sell of stock indexes at that point. So that's what I'll be looking for. And then, looking at it on the smaller time frame, yeah, there is this little, we've kind of ranged really pretty much, um, and although actually for some reason I am not seeing, oh, that's why. Here's your electronic trading hours. So we do have this gap, and we opened up really with a bit of a gap. And what you can see is that we traded back up to the top of the gap. However, we have this area that is resistance, and so we will see, of course, this resistance is L3, but as I said, I'm not giving the cam pivots a lot of credence today in these equities. So this is just the beginning of the week, and I think that there's a chance that we may go back and revisit some of those levels that we had traded initially on Friday morning. And we did have a little bit of a sell-off after that NFP number. That NFP number was actually pretty good. Good for the economy, and they decided to sell it off. There was a decent amount of volume, but it wasn't that much volume. It was pretty tiny. Even our Asia session volume is eclipsing it. So you can't take a lot of what happened off of that NFP number as gospel. You need to just let it be a bit more patient and see how things shake out. Again, I do like that level though from a resistance level and from a sell level. So if we do get back up there, that would be a pretty good level to, I think, be looking for some sells. As far as here, I'm not a big seller, although I would say that we are below this EMA. It's the 65 EMA on the 30-minute, and generally for equities, I find that equities either sells off when it falls through it or rallies when it gets above it. One of the things that you'll note here is that, at least in this early session, we have been trading that resistance level at that 65 EMA on the 30-minute once, twice, three times, four times in on the 5-minute chart, and that's just in the last hour and 20 minutes. So so far so good if you were looking at trying to get into some short entries here in the 24.080 to 24.095 area. We'll see if that holds up over the course of the day. Okay, and so that kind of takes care of the NASDAQ. Now we'll get into gold, and I know many of you are into the yellow metals, so let's take a look and see what I'm seeing here in gold. And I think it's a little bit more of a complicated chart in the sense that gold obviously hit a peak, and we've been kind of in a distribution pattern or a flag pattern, if you will, consolidating on the daily chart. Now, certainly, we are still underneath, frankly, the key level here, in my opinion, which is the 50% line of this big candle structure that initially set up the immediate highs and frankly, what I would consider the relative lows of this range. This is, in my mind, still a balanced range. There are folks that say that you should consider this a bearish trend. I wouldn't necessarily say that yet, partly because we know that bull channels exist, and there is a slight downward trend to a bull channel, and in many cases, you will see markets resume their trend upwards and through the top of the bull channel. And we're kind of seeing that right now on the daily chart. Now we're at an interesting level here because there's a couple of ways with which this can go. And frankly, the ways that I still think this can go still resolves bullish to the upside for gold. It may just, it's going to depend. And there's a couple of different tracks that it can take. The first one that you'll notice is that on the daily chart, we actually bottomed at this 200 and we have been up ever since. We are in a little bit of a trend channel, and unless this trend channel breaks, which is possible that it may do so today, and if that happens, then I think you can see us trade down. A couple of critical notes, from a bull fib perspective, I would like to see if the bull market's going to continue. Obviously, we've got to trade and stay above 43.77 and stay above that consistently on futures. And if we can do that, then gold, I think, really does have a chance to bottom here and rally. The easy thing would be just to bounce right off of this trend channel and move straight up. I'm not sure gold's going to do that. As a matter of fact, given how challenged equities, U.S. equities are, and the risk-off environment, I think gold could get challenged as well. The other element to this is that the dollar has been relatively strong of late, and frankly continues to be, partly because of increased dollar demand because of the price of crude oil, but also just because that the dollar is also considered a safe haven. And because of that, I'm kind of looking at some of the fundamental reasons why gold might have a little bit of a decline here, and that leads me to think that the primary path is still a little bit lower, and we're going to be forced to test this bull fib 43.77, 44.64, and 45.54. We're at 46.47 right now, so there is conceivably somewhere between 100 to 300 points downside. And if that's the case, you're going to be watching this trend channel pretty closely to see what happens here to give you some clues. I also think a couple of other key elements. We do have a little bit of a fair value gap, if you will, on the daily chart that we actually used as resistance today. So that also means, does that mean that we're going to come back down and look at our swing low? That's certainly possible. And in that environment, it's likely that we're going to see continued downside risk, and we'll be trading towards those bull fibs that eventually we'll have to hold in order for this move to continue. So that's where I think the primary focus should be on the daily chart. Is there anything to say that this is going to keep selling off? No, I don't have anything to say that. As a matter of fact, I still would cling to the notion that this low is a pretty solid low for the year, partly because look at where it tagged. It tagged the 200. 200-day simple moving average is where institutions are looking to reload or rebuy. A lot of them look like they did on that day. We actually haven't even come close to touching that range yet. We might, of that day, we might end if we actually trade these bull fibs, but that's what we'll see. We'll see what happens. Realistically, I do think that if we can hold VWAP here from those lows and hold the bull fibs and turn up, you've got a really nice opportunity to see this rally into the 5100s or higher. So that's where I would be looking at on the daily chart. Let's take a look at it on the 30-minute chart and give you an understanding in terms of where things are now. As I said, unlike the stock markets, gold actually did trade a full day on Thursday, and so these cam pivots are pretty valid. And I would say that these cam pivots at 43.65 so far has proven to be pretty accurate. That has been support, and the market has been bouncing off of there. I do suspect that if this 43.65 level is taken out, the next logical target would be 45.67. And remember, that starts to get us into that 38.2% bull fib from the lows. And so I do think that should this little trend line break, which it looks like it's in the process of trying to do, and we'll see what happens on the Asian Open with Tokyo and China. Um, that 45.67 is a very legitimate possibility by the end of the day. Now, I would really have liked to have seen a bit more of a rally into this 47.710 and 48.37, but we didn't get that, and I'm not sure we will. We'll see. Um, so one of the things that my indicator has just alerted me on is that the price has reached L3 and it's saying prepare a fade long. I'm not sure about that, but there is no fade long as we're relatively bearish on the time frame. And so let's take a look at my trade checklist and let's see if there is an actual trade that we have here in gold. We have the bearish structure that is down. We have the execution says trade now, it's short. Our probability is 78%. The grade is an A. The authority on the tape, and that authority right now says 5. The RMI says triangle lower down, that's 42. Time frame, 30 and the 15 must agree. We'll take a look at that here shortly. From a ratio perspective, we're already at the L3, so I'm not sure that there is a new ratio. I would actually like to see this L3 break and then allow me to get a short down to L4. So that's probably what I'll be looking for. That's what I'll be holding out for. And then the final thing is the daily range. There's plenty of daily range remaining, 81%. My target or my filter criteria is below 20% remaining. That would mean that it's exhausted. So we've got lots of opportunity, but let's take a look at the 15 and see if the 15-minute actually validates this. And so what we can see is, again, structure, higher time frames down. It's near L3. On the execution side on the 15 minutes still says wait. We're short bias, but it wants us to wait, and so I think it wants us to go through this 46.35.22 level. We're at 46.37 and a touch above it. So we'll see. Probability is on the smaller time frame, 84%. A grade of an A. So the authority says authority 6. RMI is showing a downward triangle. 30 minutes do tend to agree. Again, our risk reward ratio is the only thing that is that's probably holding us back. Same thing with the execution. If we get a little bit lower, that execution is going to change. And I do believe, there we go. You can just see it. It just changed right there. So the trade now, A plus short, it has been activated. And so that is there. Now the risk reward, the only issue is that we're at L3 and we haven't quite gone through it. So I'll be monitoring this after this session. This indicator and my checklist is available if you want to contact me. I'll be happy to share with you the details around that. But what this is doing is it's filtering out the bad trades and really only forcing me to take A plus trades and to take good ones. On the Asian time frame, it's got to have an authority level of 5 or 6, which means it's got to be a very well structured trade in order for it to happen. On the New York time frame, it could have an authority level of 4 and still get it into a good trade. So that's based on some data analysis that I had done. Anyway, so that's kind of where we're at. Gold is looking weaker, and we're starting to see that be reflected here in the 15-minute and 30-minute time frames, and that ultimately is going to, frankly, enable gold to possibly trade down to this 45.67 level. That's what I'll be watching for. You'll notice that right where we're at right now is literally the bottom of this channel on a daily chart. So we'll figure it out. You could kind of mark this as a key pivot point. Trading below 46.30, frankly, on futures is probably a bearish development, and especially if you can close a, a hourly time frame or a half-hour time frame below that 46.30, I think you'd want to be looking at some shorts, possibly going into London Open or the New York session. All right, that's all that I've got today. Let me know if you have any questions. Again, feel free to reach out to me either here or at on TradingView. Happy to chat with you more, and we'll go from there. Again, just keep an eye out on this short for gold. I do think we're going to see some lower levels here. Have a good one, guys. Good trading, and be safe out there. Talk to you later. Bye.